All right, good afternoon. My name is Tom Tanner with the Small Business Development Center. Today we're going to be talking about the disaster loan denial. So you have applied for a disaster loan and you got rejected or you got denied from that. So we're going to talk about what you can do for that. So to start with, there's going to be three reasons that you get rejected. And if you've already got rejected, you know you fall into one of those three categories, which we'll talk about. So first is unverifiable information. The next is unsubstantiated economic injury. The third is poor credit history. And we're going to talk about how you can maybe respond to all of those. So just some general notes. You need to make sure that you respond to these, to this letter no less than 6 months from the time you receive it. Of course, these are emergency loans, so there's really no reason to wait 6 months because you're in a hurry to get it. But you do have no more than 6 months, because after 6 months, you lose your right to appeal it. It also must be complete so that when you submit your application, you're submitting an application at one time. In other words, you can't send them a piece and then send them another piece and then send them another piece. It needs to be sent as one packet. If there's forms that have to be signed, such as we talk about IRS transmittal forms, tax returns, things like that, make sure all the required forms are also signed. So reconsideration request. So it's really called a reconsideration. It's not called an appeal. But basically, you have to make sure that you're including significant information to overcome the SBA's denial of the original loan application. And when you do that, you need to make sure you're also accompany all current financial information. And we'll talk about what you need. Now, if for some reason you get denied again, you have one more shot at it, and you can decline, send it into an appeal. This is actually an appeal that you could send to the Director of Disaster Assistance Program, but it must be done within 30 days of your decline. And again, in this particular thing, you're going to have to make your case even stronger and tell that you're appealing the decision. So you do have, even after this one, you do have another course of action. So let's talk about the easy one. The first one, which some of you may have received, it's not the most common, but we have had a few people do it, unverifiable information. This basically means is that you submitted an application and the bank account information was wrong. It didn't match back to the bank. So when they tried to do something, it wouldn't match. Maybe your EIN number was written wrong. Maybe you recorded your fictitious name rather than your actual legal name on your document, or et cetera. So there could be numerous reasons that it's not matching back to credit agencies, your city or county or state information, to the IRS, or even to your bank. So the form itself may have exactly what it needs in order to verify your information. If it does, you need to send that information. If not, these are some of the things that could be required. So the IRS form 4506-T, which is a transmittal form to allow the SBA to look at your tax returns. This is a document you can download from the IRS. Has to be signed by the correct parties. And this could be both business tax returns and individual tax returns. You may need to provide a picture ID. You may need to provide your tax return for 2018, 2019. You may have provided the wrong bank information, so you may need to provide a voided check so it shows the correct account and routing numbers. You may need to have your articles of organization, your corporation, articles of corporation, fictitious name certificate, and things like that. So again, you're just trying to match up and make sure the SBA has the correct information. All right, so the most common one that we get is unsubstantiated economic injury. So this is when the SBA cannot see where you actually had some sort of economic injury. And what it's basically saying is, in order to qualify for a loan, you have to have a financial condition that shows that you're not able to meet your current obligation. This could be that when you filled out the application, in the application, there was a site that says, what is your revenue and what is your cost of goods? If that wasn't completed correctly, and then they try to match it up with your current stuff, it showed that you didn't really have any damage, then that could be a cause that could kick out. So that was a confusing area that a lot of people weren't sure what to do with. Or it could be other lack of proof. Because one thing that the SBA looks at is they look at your gross margins both before and after the disaster to see whether or not, or should I say during the disaster, in this case here, to see whether or not you are still bringing in income from a gross margin standpoint. The other thing they're looking at is the amount of funds you needed to operate on normal operations, which basically looks more at your fixed costs. What fixed costs do you have to keep your business running? Just have to remember, economic injury loans can't exceed the financial requirements the business and its owners could have covered had there been no disasters. In other words, if there hadn't been a disaster, or is the business and the owners capable of providing enough to keep the business open? It's not enough about replacing profit or replacing revenue. It's totally about keeping the business open, operational. So the next one we see, the third one we see, is poor credit history. And this is a loan, so this is a loan. So credit history is going to be looked at just as much as anything else. So you want to make sure you gather up all your supporting documents. If you know what's going on, in other words, you know why you have poor credit history, then maybe you just need to put together, you know, your personal tax returns. Maybe they didn't look at that. Maybe you need to, maybe it's only, you've had poor credit history only within the last 5 months because of what's going on. You would certainly want to put together all your profit and loss statements, your tax returns, if they have not received that. And most of all, you want to put together a narrative explaining why you think it was denied and why you think that's unacceptable, a little bit about your business, etc. So I'm going to go through just some sample. Again, this is not a real, this is not going to be a long seminar, so I want to just kind of give you some sample letters that you could use. And yours could be, you might want to provide a lot more detail. I was just trying to make it as short as possible to put it on a slide. But so let's just take advantage of, look at this first one, was unverified information. So you basically all going to start off kind of similar. I'm writing to request a reconsideration of the denial for an EIDL assistance. List your application number, and the reason of denial was for unverifiable information. And you're going to change that based on why you were denied. Okay, in this particular reason, it said, I operate a gym that has been in business since 2016. I understand the loan application was denied because of unverifiable information. And I'm saying, since no other further information provided, I am providing the following information to reconsider our application. And then I'm showing what I'm actually listing, or part of my package that I'm sending in. I'm also saying I am requesting $25,000 loan assistance. This is a good time for you to actually ask for what you need, because nowhere else have you asked. They usually just say, this is what we'll approve you for. And it may be more than you need, and there's no sense in asking for it. Or if you need less, it might be better to ask for less because you might get approved easier. I also put a note here. You could provide detail on what the loan would be used for. In other words, if you really wanted to put together a spreadsheet that shows, or a list of, you know, we're asking for $25,000, $5,000 is going to be used for rent over the next 6 months, $5,000 is going to be used for utilities, you know, $10,000 is going to be used for payroll. It certainly wouldn't hurt. The more data you provide, you got to remember, an actual person is going to be looking at this. It's not like it's just going into a computer system and they figure it out. But an actual loan officer is going to be looking at this, and from there, that way they can be able to make a determination. So what you want is to provide as much information so that human that's looking at your information and will understand your business. All right, so let's go to the next example. So this is unsubstantiated economic injury, and this is just an example. In this case here, we are in the manufacturing sector, manufacturing specialized auto parts for the automotive industry. Our business was due to open on February 28, 2020. In this case here, this is a business that was not operational prior to, was not open when this disaster struck. And a lot of people think that because they weren't open, they're not able to apply for these loans, but they are. So prior to the opening of our business, the owners had invested $275,000 of their own money, received a loan of $500,000. The money was used to buy equipment, complete leasehold improvements, and for working capital. We had already interviewed numerous people, had hired 7 full-time staff, and prepared to hire more. The COVID-19 disaster struck and closed us down without ever having the chance to open or produce revenue. So you're making the case is that you've put money into the business, that you had hired people, you were ready to open the door, and bam, we got hit with this thing. So there's no doubt that you have that this disaster has caused damage to your operation. So then I followed up by evidenced by the amount of capital both invested and borrowed, along with the employees hired and ready to start work. This disaster has caused us irreparable harm. With no income coming in and the working capital was put to the side, almost used up, our need for this loan is critical to our survival. You really want to specify that, hey, we've got to have this loan if we want to keep going. Without this loan, the time, effort, and money put into this endeavor would be lost, along with the jobs that would be created. I request that you urgently reconsider your decision and provide us with the needed funding to keep our business afloat. We're requesting $145,000 in loan assistance. We have provided the list of startup expenses, the capital invested, the amount of loans received, and the personal tax return, personal financial statements of each owner. Please contact me, et cetera, et cetera. Again, if you want to provide more detail on what exactly the loan would be used for, that's good. The more information you can provide, the better. All right, so let's try another one. So this is another one. This is a particular business that's been open for a while, and maybe the application was just not completed correctly, so it wasn't proven to the loan officer that it was needed. So this is person said, our business owns a motel. We have been in business since 2005. Prior to the disaster, we employed 8 people. If you see the attached profit and loss comparison report showing the January through May 2019 versus January through May of 2020, you'll see that our business revenues is down 65%. Additionally, if you look at the period between March 1st through May 31st for 2019 compared to 2020, you will see we've lost 84% of our business. I'm making the case that we have been substantially affected by this event. So we're trying to basically show that if you denied for unsubstantiated economic injury, I don't know how I can get more substantiated than this particular area right here. So we have invested over $1 million in our property and have consistently provided jobs to 8 people. As you can see from our financials, we have certainly been affected by this disaster. In order to keep our business from closing and employees losing their job, I can constantly talk about losing jobs because that's one of the main things that they're looking at is how can we keep people from losing their job? That's what the whole PPP program is all about. We need a minimum of $100,000 in disaster loans to help cover our normal operating costs such as mortgage payments, insurance, utilities, and what employees we can keep. Again, I'm spelling out exactly what I'm using it for. If I want to go into more detail, it's even better that my monthly rent is this, or my monthly mortgage payments is this. This is how much it's going to be. We need money to cover us through the end of 2020, etc. I request that you urgently reconsider your decision and provide us with the needed funding to keep our business afloat. We are requesting $75,000 in loan assistance. We have provided our profit and loss statement, balance sheets, et cetera, et cetera, et cetera. So Again, this just gives you an example of what you're trying to do is tell a story to the loan officer that, hey, we've been affected. There's no reason in the world you can't say we haven't been affected, and we're substantiating the fact that we have been. All right, so let's go into the next case where we're talking about denial for credit history. And this could be for several reasons. So I'm going to start off with the first one here. This is a business that's been around for a while. We operate a travel agency in business since 1995, so it shows that we've been in business a long time. The small travel agency business sector has been hard by the large internet travel business, and as such, our income has been declining over the last few years. So it's starting to show the trend of why maybe we have some poor credit history. So in late 2019, we invested $100,000, oops, got an extra zero, in computers and software to allow us to better compete with the larger companies. We also hired additional employees. Because of our decrease in revenue over the last several years, we had gotten behind in some of our bills, and as such, our credit score had suffered. Additionally, since the owners did not pay any pay in the second half of 2019, the owners have also been personally affected by poor credit. So I'm trying to tell a story of why we have been damaged. We've been damaged because we were in an industry that had been declining anyway. And then we decided to really invest hard and go forward, and then we got whacked with this thing. So we certainly have been affected by that. Also talk about something like our majority owner also had a large medical bill, which he has defaulted on. The SBA may not be aware of this issue. As we understand, the SBA cannot turn down a loan for medical debt, and that's true. If they gave you poor credit history and they didn't dig into the credit history, and it's a credit history of an individual, and it's because of medical debt, that's not a clarification that they can deny a loan for. Our company was poised for a great 2020, starting this year off well, but was hit hard at the end of February when 90% of our revenue went away. We invested heavily in new technology and people and have been drastically affected by the COVID-19 disaster. Again, I'm making my case that we know why we have, maybe our credit history is bad, but we've reinvested in the company. We are moving forward. If it wasn't for this, we would have been back on track to have a really good year. So I request that you urgently reconsider decision and provide us with the needed funding to keep our business afloat. We're requesting $35,000 in loan assistance, and basically what is to pay for. And again, the same thing about what we have. All right, so another version of that is denial for poor credit. And this is a little bit different. So this is a guy who operates a restaurant that's been in business since 2012. I understand the loan application was denied because of poor credit history. Since no further information was provided, I checked the credit reports at the 3 credit agencies. When checking these reports, all 3 had reported defaults and other late payments on erroneous information that did not involve our company, but was a separate company with a different EIN, but had a similar name. So in other words, it was posted to these particular credit agencies wrong, which we know certainly happens. Typically, it's only posted to one wrong, but I'm making the point that maybe it's all 3 of them. So I've notified these agencies with the correct information, which we have attached to show documentation that I have updated the information with them and why it's wrong, et cetera, et cetera. Unfortunately, our understanding is that the change to our credit report could take weeks or even months to fix, and our business does not have the time or resources to wait. I've enclosed our documentation to include our profit and loss statements, balance sheet, tax returns, anything else I think is important. I request you urgently reconsider your decision and provide us with the needed funding to keep my business afloat. Again, I'm requesting $25,000 in loan assistance. I need to cover rent, utilities, and what employees we still got left. So those kind of give you some sample letters of what you can do. So this is where you send, and of course, if you get a denial letter, this information is going to be in your denial letter, but I'm just showing this is the place that you go to. Real quick, I do just want to cover if you do get a loan, and this is more about if you do get a loan, that they will send you a document to sign, the loan documents. The loan documents are 19 pages long. You need to read through it in detail to understand what you're signing. I'm just going to touch base on a couple of items, but there's some very particular things in there you need to read about. One is you need to make sure that that you've sustained an injury that's caused by the disaster. So these are the most important things that I've noticed from reading these documents. So if you can get less than if you get approved and you need less than $25,000, ask for $25,000. Don't take more than $25,000 unless you need it. Under $25,000, there's no collateral required. You don't have to worry about liens against your equipment or anything else. It's very, very simple. Once you reach $25,001, you're granting the SBA continuing interest in all that collateral the company has currently and is going to acquire immediately upon receipts of these funds. Okay, this could be your equipment, vehicles, notes that you may have, receivables, deposit accounts, inventory, all that stuff. The SBA has a lien against, which is going to cause you issues if you need to borrow more money in the future because you may have already given away the first lien trust on all this stuff. So you also state in there, borrower will not sell or transfer any collateral except for inventory, describing the collateral without the prior written consent of the SBA. Also, the borrower will neither seek nor accept future advances under any superior liens on the collateral securing this loan without prior written. So you're basically saying is, if you've got anything you own, I own a piece of equipment and I need to sell it, I've got to ask for permission to sell it. I got a vehicle that's about to blow up and I need to get rid of it. I got to ask the SBA for permission to sell it. So make sure you understand those. These are 30-year loans. So you just have to be familiar with what you're signing because they are pretty intense documents. Okay, the use of the loan proceeds, just real quick, borrower will use all the proceeds of this loan solely as working capital to alleviate economic injury caused by disaster occurring in the month of January 30th, 2020 and continuing thereafter. In most of the documents, not the documents you sign, but the documents state that you are not allowed to use this for refinancing of debt. Okay? In your documents that you're signing, it does not say anything about that. So you have to make a decision on whether or not refinancing debt is something you're capable of doing because it is causing economic injury because you have these high payments and you're trying to lower your to get more working capital. So I'm not telling you to pay off debt. I'm just saying that it doesn't say in the application that you can't, but it does in other documents that say you can't. So you also have to keep all your receipts, paid invoices, canceled checks, et cetera, for 3 years from the date of the final disbursement. The final disbursement basically means when you get the funds, which is normally going to be all at one time. All right. So that is the end of the presentation. Real quick, I want to stop the recording before we go into questions and answers.